Hey everyone, welcome back to the channel. If you're watching this, chances are you're feeling a little overwhelmed by your money, maybe a bit lost, or you just know deep down that there's a better way to manage your finances in this year. Well, you're in the absolute right place. Just all you need, stay with me for a few minutes. So today, we're tackling the ultimate starting point for anyone looking to take control of their money, reduce stress, and build a brighter financial future, and why budgeting more important. For now, forget everything you think you know about budgeting being restrictive or boring. I promise you, by the end of this guide, you'll have a clear, actionable plan to create a budgeting that actually works for you, here in this year. This isn't just about cutting costs. It's about making your money work smarter, for a future you're excited about. Let's dive in. Why budgeting is your superpower. First, let's talk about why budgeting isn't a chore, but your financial superpower. Many people avoid budgeting because they think it's about deprivation. But that's the wrong mindset entirely. Budgeting is about freedom. It gives you instant 5 mindset for your future goals. So, those are clarity, control, confidence, goal achievement, and most of the time it reduced your stress. Let's talk about this deeply. Clarity means after this video you will finally know and see where is going your every single money. No more mystery. And you tell your money what to do instead of wondering where it went. That's called control your money. Confidence make informed decisions, not just guesses. And finally targeting your goal achievement. Whether it's buying a home, starting a business, or retiring comfortably, budgeting is the roadmap to get there. Knowing your financial situation deeply reduces anxiety and improves your overall well-being. So think of it like this. If you're going on a trip, you wouldn't just jump in a car and drive aimlessly, right? You'd plan your route, know your destination. Your money is no different. Budgeting is your financial GPS. The core principle of your budgeting is income versus expenses. At its heart, budgeting is incredibly simple. It's about knowing two things. How much money is coming in, that's your income. And how much money is going out, and that's your expenses. The golden rule is, your income must be greater than or equal to your expenses. If it's not, you're in a deficit, and that's where financial trouble starts. Our goal with budgeting is to ensure a positive flow, so you have enough money left over for savings and investments. Let's break down how to identify these. First, talk to income. This is usually straightforward. Your salary from your job. Any income from freelancing or a side hustle. Rental income. Or business profits. So, list all your sources of income and total them up. Be realistic. If your salary fluctuates, take an average or use the lowest expected amount to be safe. Second is expenses. This is where the real work and the real insights begin. Expenses fall into two main categories. Fixed expenses and other is variable expenses. Understanding the difference between fixed and variable expenses is crucial for effective budgeting. Fixed expenses. These are expenses that are usually the same amount every month, and you generally can't easily change them in the short term. Fixed expenses like rent or mortgage payment. Loan EMIs, personal loan, car loan, student loan. Insurance premiums, life, health, or a car. Utilities are often relatively fixed or with a predictable range. Subscription services, Netflix, internet, phone bill. Go through your bank statements, mobile banking apps, and any receipts from the last 2 to 3 months. List out every single fixed expense and its exact amount. And the other expenses are variable expenses. These are expenses that change month to month, and you have more control over them. This is often where your money disappears if you're not tracking it. So, we spend more groceries or food items. This is a big one. Then, transportation are fuel, ride-sharing, bus fares. Then, entertainment expenses like movies, dining out, social events. Shopping items, clothes, electronics, and personal care, haircuts, cosmetics, gifts. Miscellaneous, unexpected small purchases. This is where tracking becomes key. For the next month, meticulously track every single dollar you spend in these categories. You can use an app, a notebook, or a simple spreadsheet. Don't judge, just observe. Next is choosing your budgeting method. Now that you know what income and expenses are, how do you actually do the budgeting? There's no one-size-fits-all, so let's explore popular methods and you can pick what suits in your personality and lifestyle. Number 1 is spreadsheet method. So, this is my personal favorite. How it works: a simple Excel or Google sheet. List income at the top, then fixed expenses, then variable. You can use formulas to track the difference. Highly customizable, great for visual learners, free if you have Google Sheets or Excel. Requires some manual input, can be intimidating if you're not spreadsheet savvy. I've linked a simple budget template in the description below that you can download and adapt. Try to budgeting apps. Apps like Mint, if available or suitable, or even local apps in the world are becoming more popular. You link bank accounts, if comfortable, or manually input transactions. Automation, visual dashboards, reminders, categorizing can be quick. Some require subscriptions, may not integrate perfectly with all local banks. Data privacy concerns for some. Download 1 or 2 free versions and try them for a week to see which interface you prefer. You also try the pen and paper method. A simple notebook or ledger. Write down your income, list your planned expenses, and track your actual spending daily. No tech required, very tactile and hands-on, great for those who like to physically write things down. Can be cumbersome for lots of transactions, easy to lose. Get a dedicated notebook. Label it like My Financial Freedom Journey to make it motivating every day. And last method, 50-30-20 rule are the most popular method in this year. 50% needs, 30% wants, 20% savings and debt repayment. Just you need to do after tax income is split into 50% needs, like rent, groceries, and utilities, other one transportation, loan payments. Things you must have. 30% wants means how much spend your dining out, entertainment, and shopping, hobbies. Things that improve your life but aren't essential. Last 20% savings and debt repayment. Build emergency fund, investments, and extra debt payments. This is very simple, provides clear guidelines, easy to understand. May not fit everyone's exact situation if rent is very high. Can be challenging if you have high debt. Calculate your own 50-30-20 breakdown and see if it's realistic for your current income and expenses. It's a great target. Just enough talk. Let's actually build a budget together, step by step. Grab your preferred tool, whether it's a pen and paper, my template, or an app, and follow along this 4-step. First, calculate your monthly net income. Then list all your fixed expenses. And estimate your variable expenses. The last one is calculate your income and subtract your expenses. So, first calculate your monthly net income. This is your take-home pay after taxes and any deductions. If you have multiple income sources, add them all up. For example, let's say your net salary is $1,000, and you have a side gig bringing in $400. That's your total monthly income is $1,400. Then, list all your fixed expenses. Go through your bank statements, mobile bill, rent agreements. Suppose your rent is $400, your student loan, $200, monthly internet bill, $50, and mobile bill are $30. Total your fixed expenses $680. Next, you have to do estimating your variable expenses. This is where tracking over a month or 2 is ideal. If you don't have that data yet, make your best honest estimate. Be realistic. Don't underestimate. It's better to overestimate slightly than underestimate and run out of money. Here example. Groceries expense like $100. Transportation are $50, dining out $50, entertainment expenses $50, and personal care $50. So, estimated variable expenses total $300. At last, calculate your income and minus your expenses. Subtract your total fixed expenses plus total variable expenses from your total income. Example, $1,400 is your monthly income. Subtract $680, that's your fixed expenses. And subtract $300, this estimate your variable expenses. So, in this math example we found a number. This is our final amount for future budgeting. End of the day we calculate monthly net income, all fixed expenses, and estimate variable expenses. After subtract all expenses, we found $420. If the number is positive, your field congratulations. This is your surplus. This money should immediately go to savings, investments, or extra debt repayment. If the number is negative, don't panic, just analyze. As we discussed, a deficit isn't a failure, it's a discovery. Take a deep breath. Your goal now is to understand why it's negative. When you're tracking your income and expenses, and you tally everything up, you might find that your total outflow, spending, is greater than your total inflow, earnings. This is precisely why we budget. It means you're spending more than you earn. This is your cue to move to the next crucial step: adjusting your budget. If your budget shows you're spending more than you earn, or if you simply want to free up more money for your goals, it's time to adjust again. Here's how you do it. Attack variable expenses first. This is your easiest target. Can you reduce dining out from $50 to $30? And there are cheaper transportation options? In a round you just found one thing. Think again, do you really need that new item of clothing or gadget? Look for fat in your variable expenses. Even small cuts add up quickly. Again, review all fixed expenses. You can find a cheaper internet plan? Subtract all unused subscriptions? Can you refinance a loan for a lower EMI? More affordable living situation be an option in the long run? Call your service providers. Sometimes just asking can get you a better deal. You must have increased your income, more and more importantly. Ask every day in yourself, this often the most impactful long-term solution. You can say yourself for a raise? Can you take on a side hustle, like freelancing, teaching, online sales? Or in used items can you sell? Brainstorm 3 or 4 ways you could realistically earn an extra $300 to $500 this month. If you think this is too much for you, do whatever you think. Remember, every money you saved or earned that can work for your future self. Always remember making your budget stick. Creating the budget is one thing, sticking to it is another. Here are my top tips for your long-term budgeting success, especially in our context I told before. Be realistic. Don't set yourself up for failure with an impossible budget. Start small, then tighten it gradually. As soon as you get paid, transfer your target savings amount to a separate account. Pay yourself first. And other one, review regularly. Your budget isn't a one and done. Life changes. Review it weekly or monthly. Are you on track? Do categories need adjusting? That's called automate savings. So be flexible, not rigid. Life happens. An unexpected expense? Adjust other categories for that month. Don't throw the whole budget out the window. Find a budget buddy or share your goals with a trusted friend or family member, for accountability helps. Celebrate small wins like, did you stick to your grocery budget this month? Did you hit a savings goal? Acknowledge it. Positive reinforcement is powerful. Understand your spending triggers. What makes you overspend? Is it stress? Boredom? Social pressure? Identify it and find healthier coping mechanisms. Don't get discouraged. You will have months where you mess up. It's okay. Just pick yourself up, learn from it, and get back on track. Consistency over perfection. Just stick around with me, I will tell you your next steps. You've made it this far, and that tells me you're serious about taking control of your financial future. That's fantastic. Your homework, and your first step towards true financial freedom, is to start your budget today. Not tomorrow, not next week. Today. Choose your method, spreadsheet, app, or pen and paper. You just take some time for it and grab anything. I just say you. Gather your all data, income and expenses from the last 1 to 2 months. And create your first draft budget forever. Don't aim for perfection on day 1. Just get it down. the more clarity you gain will be more immense. This is a motivation, you just take it in 2025. After 2 or 3 years later you will enter top 30% pro budgeter in your circle. And again, I think this is the perfect time to build budgeting together. This isn't just about numbers. It's about building a life where you feel secure, confident, and excited about your future. Budgeting is the key that unlocks that door. If this video helped you, please give it a thumbs up, share it with someone who needs this guidance, and most importantly, subscribe to the channel and hit that notification bell so you don't miss our next video. And I will motivate you in every single video, and also comment if you want to know something for your financial investment or something else. I will try replay every comment. Remember, your financial freedom journey starts now. You got this. I'll see you in the next video. Stay motivated with me.